Hey, Walt here with the Schultz team at Canopy Mortgage, and I've got Sean Herrero with us.
Hello, hello.
Cross Country Mortgage, right?
That's right.
Perfect. Now, Sean is in a little different market than a lot of us. He's in sunny Southern California.
Northern California.
Northern California.
Northern California.
All right, well, then you're a lot like Oregon, aren't you?
Oh, we still got better weather than Oregon, in my opinion.
You do. But you know what? I have sun today, so I'm happy.
Yeah, that's a blessing.
It's a blessing. Well, cool, man. So we got to talking, Sean and I, we both use Mortgage Coach. And if you're not familiar with Mortgage Coach, it's a program that enables you to be able to put multiple scenarios together and map out a scenario for a client. We know that really strategy is number one in today's market. Even opposed to rate, strategy will always win. And so what we wanted to show you was a couple of ideas to be able to help with your CMA, to be able to show, we call it a TCA, total cost analysis, link it together with your CMA to show your clients and really map out a move up analysis and maybe a couple other ideas. So Sean, do you want to take us off first real quick and show us what you have?
Yeah. So what Walt and I were really trying to do here is we want to piggyback on the CMAs that you're creating. And we want to show more value. So if you have somebody who's interested and they want to see how they can transfer their equity from one home to another, this tool enables us to illustrate that for them. I call it show, not tell. It just makes it easier for people to digest the information. So as a basic example, I worked up somebody who had bought a home for $500,000, 20% down. Let's say the home appreciated 5% per year. Now it's worth $600,000. They will have paid their loan amount down to about $380,000 after 2 years. So we would take the net proceeds of about $225,000 to help them buy down to a smaller home. That smaller home is going to have the same price, hypothetically, as their bigger home did because of appreciation. So using that, we're showing them how they're going to have a much smaller loan amount. You're going to have a $100,000 smaller loan amount. And even with current interest rates, they're still going to save $54 a month. Now, that's not good enough, right? But what we really want to drive home is as inflation goes down, we will see mortgage rates go down. Mortgage Bankers Association is predicting 5.25% by the end of the year. So I used that estimate to show them what it would look like if they bought the smaller home and then refinanced it later. They'll have a net savings of about $234 per month. So what we're showing them is they're engaged with you to purchase, to sell their current home. And then, you know, I'm an empty nester, I need a smaller house. This is showing them how they can accomplish that goal using all of the proceeds from their current sale.
So I love that, Sean. Show us the net worth down the bottom right.
Oh yeah, I forgot. So this is what I like too. So I always try to show people short term, because if I show somebody how much money they'll have in 30 years, it's too far away. We can't understand that. So what we really focused on, or what I try to focus on, is short term. So in 3 years, using the same appreciation, 5% appreciation on the same property, because they've transferred the equity, they'll have about $80,000 more in net worth, in equity in the property, compared to if they kept the current home. So we're showing them your monthly payment stays about the same. You're going to have an extra $80,000 after 3 years, and you have that smaller home that you were looking for because you just don't need all that space and maintenance anymore.
Love it. Love it. You know, one thing that really hit me was we saw during COVID that really the millennials drove the market, right? Mm-hmm. But the one thing that hit me was this last year when we received the new numbers from the NAR, millennials did not pace the market this last year. So in 2022, it was actually
boomers, right?
I'm totally misplaced. It was baby boomers.
Yeah.
Boomers. So baby boomers are the ones that outpace the market significantly over millennials. And so the move down buyer is such of a benefit, such of a great path to be able to go. Love that. Let me show you what I had together here for you. So I did a move up buyer instead of a move down. Now our price points are a little different, but not much. And I looked for a refinance out a little past that 5.25% at the end of the year, but into next year when we're anticipated to hit around that 4%. So if we had a current home, purchase price was $425, loan amount over a several year period is going to be roughly 297.5 at a 3.5% rate. Payment 1745 a month. When you have that 1745, you then, if you wanted to move up, sell your house, and this would be again move up. Instead of that 425, you move up to 550, roughly a 6.75% rate. At that point, your payment's going to be roughly 3568 a month. So it's going to jump up quite a bit, but that gives you the ability to be able to get into that house now, bite the bullet for a little while as long as you qualify. But then there you've got, as you refinance down at that 4%, you're really looking at about $1,000 increase for $125,000 purchase price when you're able to refinance. So if that's in a year from now, year and a half from now, again, when we're looking at net worth, I did it over 15 years, and I can change it to 5 years or whatever, but over 15 years, if you were to stay in your current home, you're looking at value being roughly 696, where you're generating quite a bit more equity in that move up at roughly 840,000. So, so really showing clients, I think, the thing that I love most about Mortgage Coach is being able to show clients a very succinct, very easy way to be able to get to those numbers. This, I think, shows if a client's looking at moving up, hey, this is exactly how much it's going to cost me. I love the move down analysis because those boomers are starting to move down. I mean, they're, and the beauty about it is that what do you do with that equity? I mean, we can also show, if we get into future talks with clients, we can show if you were to take X amount and invest it with a financial planner and whatnot. So just so much that you can do with Mortgage Coach. Do you have any final thoughts?
Yeah, I mean, really what Walt and I wanted to do for you all is show, how we can illustrate for your clients what this actually looks like. Because once somebody gets engaged on your CMA, what do I do with the equity when I transfer it? That's where we can illustrate it. It's very easy for us to create this. And I would say there's nothing we can't illustrate. Using this tool, we can show your clients anything they want to see. So it's I can't live without it. Walt can't live without it. We've used it for years. And your local mortgage advisor that's invited you to this group can help you with this as well.
Yep. Beautiful. Well, hey, thanks, Sean, so much for taking the time with me, and thanks for helping to make an impact upon the CMA Day Challenge.
No, thank you, Walt. Thanks for putting it together.
All right, bye.
All right, bye-bye.